Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you've been following along with the market guys long enough, you'll know that I leave my lines on the chart from the previous week's forecast so you can see just how well technical analysis is when we forecast the markets. And right here is what I drew last week. I said that we might pull up a little bit to test the moving average. We came back down with the end of the line right there being my target. We hit the target precisely yesterday right there on June 28th. Today, that little candle right there, June 29th, as we come into the close of the market today, is showing a long shadow above the candle. Now, what does that mean for next week? Well, it means that the sellers are coming in towards the end of the day, and there's some motivation there on the sell side. So I think that we're going to continue lower to retest this low right here. So what I'm going to do is I'm going to draw a level of support just right around these lows right here, and then I'm going to extend my line a little bit lower because I think that we could again move just a little bit further down as the sellers have their way with the market. Now, that doesn't mean we're going to have a massive sell-off. In fact, on the contrary, once we hit support level right here, there's a good chance we could start to bounce. And you'll notice this line I'm going to leave in place. That is a gap fill target area. You can see there's a very minor gap from this low to this high that is still left open. And if you, again, following along with the market guys, you'll know that our gap trading strategies tell us that 80% of the time the gap will fill. And so that means that these gaps here and here are going to act as price targets. Now let's move to the S&P 500, which is represented in the spiders, ticker symbol SPY. And again, last week I said we would most likely move lower, and the end of this line being my target. And look at that, Friday, here we go. On the 29th, we're closing right at my target number right there. But again, like the diamonds, we're seeing a long shadow above that market. So what does that mean for next week? I'm just going to extend this a little bit lower as well in that same angle, and I'm going to say that by next week we are going to have lower prices. Now keep in mind, next week is a shortened trading week. We have the 4th of July holiday right smack dab in the middle of the week on Wednesday, so there could be some light volume due to the fact that people are going to move into vacation mode and attach some of those vacation days they've saved at work to the holiday and have a nice long weekend or maybe even a full week of fun in the sun with the family. So this is going to be my target. This low right here is going to be the support level, and I'm going to draw that in place and keep that for next week so we can analyze that as well. Now, with the spiders, I'm going to now pull up the volatility index. This is the S&P 500 VIX, as it's known. This, for a lot of people, it's also the fear index. And last week I said that the volatility index would most likely rally. And I drew my line of resistance from this high back here in April. That was right around April 24th. And you can see that right there on Monday, we moved up to my target resistance to the penny. I mean, again, it doesn't get any better than this. We went right to that target, and then we drop back down, and today we see what's called a hammer pattern. What does that mean? Well, a hammer pattern is a bullish sign on the candles when we have, again, a long shadow under the candle is telling us that the buyers are coming in. Now, that is a bearish indication for the market because remember, the volatility index is inversely related to the S&P. So if we're getting a bullish sign on the VIX, that's bearish for the S&P, and we just went over that. Now we're getting ready for the market to close here any second. I'm going to erase this line and draw my forecast for next next week, and I believe that the VIX is going to rally right back up to that high to retest that resistance level. So we have to really keep an eye on that. Now, if we take a look at the Qs, which is QQQ, this represents the NASDAQ market. Again, we have some bearish signs coming in with this. The market is closing right at 4 p.m. Eastern Time. This is a bearish sign for the Qs. While we still have an unfilled gap above the market, I still think that next week the Qs could go a little bit lower and actually drop below this support level. So what I'm going to do is redraw my support actually to this low right here, and then I'm going to draw my forecast line in this downward angle right to that support level. So in other words, my forecast is going to be lower prices for next week during the shortened trading week on lighter volume, and a possible test of this support level for the Qs. After we hit support, there's a good chance that we could bounce and start working our way back up to fill that gap, but it's still too early to make that call because, again, the volume and the signals here on the candles are still showing bearish signs. Now, finally, if we look at the Russell 2000, this is the last index we're going to look at. Very, very interesting. We came in and we went lower just as I said we would. This line right here is the role reversal support level. Interestingly enough, we came right to that support level on Wednesday. We breached it briefly during the day yesterday, showed a little bit of a hammer pattern, which you would think is a bullish sign, and it is if it was left that way by itself. But what happened? Let me zoom in a little bit further. We had a counter candle, I'll call it that, where we have this long shadow on the bottom is now offset by the long shadow up top. And what that means is that we could very well see lower prices for the Russell 2000 as well. So what I'm going to do is draw that line just like that. Why am I stopping there? Because I believe that this low right here is most likely going to act as support. So I'm going to draw that out to the right, leave that in place for next week. I'll erase that just to clean things up a little bit, make it easier on your eye. Again, forecast for next week, right across the board, I am looking at bearish signs with lower prices and a bullish VIX. Now, next month in July, to be more specific, July 23rd, I'm going to be presenting at the Traders Expo. Now, this is July 22nd through 24th. I'm going to be speaking on the 23rd. Right here you can click and see the agenda there. Thankfully, I'm positioned right next to my good friend John Nigerian there, and I plan on meeting with John at least during the lunch break. So if anyone is in Chicago and you want to mingle with some of the speakers, just let me know. Just hang by my side and I'll make all the introductions. John Bollinger will be there as well. Linda Raschke will be there. Dan Gramza. These are friends of mine. Be very happy to make the introductions and have a great time. My topic is going to be more in the lines of risk management. You can see right here how to manage risk and volatile markets. But it's going to have a cryptocurrency spin on it. I'm going on behalf of TradeStation as their hired hand to speak on stage, and I'm going to be talking about the cryptocurrency market and how to handle the volatility using technical analysis as the main tool. So hopefully I'll get to see everyone out there, whoever's going. Don't be shy. Walk right up to me. If you have one of my books, I'd be very happy to sign that as well. And we're going to have an action-packed day right there at the CBOE. So have a great weekend. And if you're taking a vacation, have a great 4th of July week. And we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.